Welcome back. Well, AI expanding across every sector of this economy, and mortgage originator Better.com capitalizing on it. The company building one of the country's leading AI mortgage and home equity platforms, aiming to cut costs and speed up the process for home buyers. The stock skyrocketing more than 500% year to date. Look at this stock of Better. And in just the last 3 months, the stock climbing over 350%. A real move in Better Home and Finance Holding Company, Better. Joining me now is Better.com founder and CEO Vishal Garg. Vishal, congratulations. What a move.
Oh, thank you so much, Maria. It's been amazing.
How did this come about? Tell me about the company and how you started it.
I started it about 10 years ago. I went to go get a mortgage. Our second kid was on the way, and the process took forever. My wife was working at a big bank, and the bank said, like, it'll take 60 days to get the loan approved, and I lost the house to a all-cash bidder. And so I said, I took the down payment, bought Better.com, and here we are 10 years later, $100 billion of loans done, and just leaned in to make the process cheaper, faster, easier for all Americans.
That is incredible. And you've been expanding fast since launching back in 2014. Better.com's home equity business increasing 260% year over year, while its mortgage business is growing at 35% quarter over quarter. Tell me how this works. How does someone get a loan from Better.com?
You just go online, you talk to our AI assistant, Betsy, and she can get you pre-approved in like 2 minutes talking on the phone, or you can apply online, and within a minute, you'll get your pre-approval letter. Within like 2-3 minutes after that, you can lock in your rate. Once you lock in your rate, like 40% of the loans are now being underwritten by the AI completely end-to-end, so you'll get a commitment letter from us. Like you've gone into purchase contract, you'll get a commitment letter from us in 45 minutes or so. It's really, really fast, and it takes the entire process, which usually takes 28 people, costs a bank $12,000, and we're turning it into something that takes minutes.
Well, how does it take so quick to do it with Better, and how do you do the vetting that needs to be done to ensure that you're giving the loan to the people that you need to give it to?
Oh, totally. I mean, we have done over 100 billion of loans. Our default rate is 1/3 of the industry average. So we're making loans to people who can afford them, and we're making sure of that. So the proof is in the pudding. But the interesting thing is, along the way, we've collected over 5 billion mortgage documents. We've got 12 million recorded phone calls, and we've been able to train the AI in all of this, and so it's able to take the best things that the best underwriters, the best processors, the best loan officers do, and make it available for everyone.
What about the rest of the market here? It feels like there are increasing companies coming in. It's becoming a little more of a crowded field. You've got the government, Treasury Secretary Scott Bessent, taking Fannie Mae and Freddie Mac public, 5% of those companies public. I spoke with one of the competitors, the CEO of Figure, and he joined me just over the last week or so. Here's what he said. Watch. In terms of the market that is available to you right now, the potential market, what would that look like?
One of the big ones that we're going after is first lien mortgage. So we're now competing directly with Fannie Mae and Freddie Mac, using blockchain technology as an advantage. And for certainly loans under $500,000, we're winning in that competition right now.
And Fannie and Freddie are likely going to see their own IPOs once again, right? President Trump expected to take 5% of those companies public. Does that sort of even pony up the competition that much further?
Well, we like competing against them as private enterprises. They get a little bit of an unfair advantage as a government-backed entity, but so it levels the playing field a little bit. But right now we're winning irrespective.
And you're winning as well. What does it mean when Fannie Mae and Freddie Mac go public for 5% of their companies?
I think it's going to be unbelievable. Before the global financial crisis, when they were public companies, they used to vary the guarantee fee they charged based on how well you originated the loans and the default rates. And we have one of the lowest default rates in the country, so we should have a lower guarantee fee. Right now, there's a bit of socialism. Everybody has the same guarantee fee. And once they're a private company, we're going to get a lower guarantee fee, and we're going to be able to pass that savings on to our customers. So we're going to get even more competitive. Right now, like a Fannie Mae loan costs like 6 3/8. Somewhere else, it costs 6 1/8, like on Better.com.
I think we could do it like
5 3/4 if Fannie and Freddie got privatized.
Does your business get even better when interest rates come down as well?
Oh my God, it's amazing. So when interest rates come down, like last time they came down, we grew 30x in the space of 2 years. We were able to like go and take advantage and get America like refinanced in a way that nobody else could. We were the fastest growing fintech in America from 2016 to 2021. And yeah, as rates come back down, we hope like we can get to like 5-10% market share in the market.
Wow. All right, Vishal. Good stuff. We're going to be watching your company.
Thank you so much.
Good to have you here, Vishal Garg. Check out better.com. We will see you soon. Quick break.